People ask it all the time, is gold in a bubble? Is a crash coming? And here's the truth, the odds of a gold price crash in 2025 are extremely low. And in this video, we're going to walk through exactly why. Let's start with where gold is today. After breaking past all-time highs, many expected a sharp pullback, but it hasn't come. Why? Because the fundamentals are stronger than ever. This is not like tech stocks or crypto. Gold doesn't trade on hype. It trades on confidence, or the lack of it, in the financial system. Gold is being bought aggressively by central banks. We're seeing record monthly purchases from countries like China, India, Turkey, and Russia. This isn't speculative trading. These are government-level decisions to diversify out of the US dollar. And when central banks buy gold, they're not flipping it in a few weeks. They're locking it away for decades. That creates deep, sticky demand. Meanwhile, individual investors are holding tighter than ever. In uncertain times, people don't sell gold, they run to it. Geopolitical risk, wars, elections, cyber threats, these aren't just headlines. They're driving demand for hard assets. Gold's price reflects that fear, and it's not going away. The next reason gold isn't crashing? Inflation may be slowing on paper, but honestly, purchasing power is still falling. Governments want people to believe inflation is under control, but when you go to the grocery store, fill up your car, or pay rent, it's clear costs are still rising. Real inflation is sticky, and gold is a proven long-term hedge. Another thing, interest rates are near their peak, but real yields, adjusted for inflation, remain low or even negative. When real returns are poor, gold becomes more attractive. In the past, rising interest rates crushed gold. But in this cycle, gold has actually risen with rates. That's new. That shows how broken confidence in fiat currencies really is. There's also a shift happening in the East versus West dynamic. For decades, Western investors drove the gold market. But now, the East, Asia, the Middle East, BRICS nations, are becoming the dominant buyers. And they're buying not just for returns but for protection against dollar weaponization. It's political, it's strategic, and that kind of demand doesn't vanish overnight. Debt is another anchor on the system. With global debt hitting over $320 trillion, governments have fewer tools to deal with crises. Printing more money is the go-to option, and every time that happens, the value of fiat declines. Investors know this. That's why they're holding gold as a hedge against systemic collapse, not just inflation. Then there's the rise of CBDCs, digital versions of fiat currencies. As these roll out, many people are becoming more aware of how little control they may have over their money. With programmable money comes the risk of surveillance, restrictions, and even loss of privacy. This is pushing demand for gold and silver as alternatives to a fully digital system. Let's also talk about mining. Gold isn't getting any easier to extract. Major discoveries have dropped off, costs to mine have risen, and new environmental regulations make future production more expensive. That means supply growth is slow, while demand is growing. That's a long-term bullish setup. Psychologically, investors now view gold as more than just a doomsday asset. It's becoming mainstream. Institutions are allocating again, sovereign wealth funds are buying, even younger investors are learning the role gold plays in preserving purchasing power over decades. This is cultural and it doesn't reverse quickly. In short, there's no bubble in gold. Prices have risen, yes, but they've done so on solid fundamentals, not wild speculation. There's no massive leverage in the gold market. There's no meme stock dynamic. It's real money moving into real assets. So, could gold correct short-term? Sure, markets breathe. But a crash? Unlikely. The world is too unstable, the debt is too high, the money too weak, and the buyers too committed. Gold is here to stay. And if anything, we might look back and realize these prices were still cheap. If you found this helpful, follow the channel, we're just getting started.